Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So not many things to discuss today. As you can see, price action stands in a narrow range. Recent session, in fact, inside one to the previous, and all three sessions inside one to the Friday's action. So it's very tight performance here, especially the eve of the Fed statement. So currently gold has very contradictory steps and patterns. This could actually keep door open for both directions. So in general, speaking on a high time frames analysis, this is huge engulfing on the monthly chart as we're following, and this pattern suggests strong extension to the downside at some moment. In fact, this pullback somewhere to the 50% resistance theoretically is quite enough to treat it as there's some minor pullback inside of the engulfing pattern before extension. And from that standpoint, theoretically it might be some upward continuation, minor fluctuation around it, but usually markets never goes higher than the 618 level before starting an extension. In most cases, this reaction back in the body of the pattern even smaller, somewhere to the 30% level. And everything would be good for that setup if we haven't got the one thing, the intraday type of action here. It is not quite direction. It's a bit choppy, and the patterns that is forming here, well, doesn't look really bearish. And finally, on the daily chart, you can see we've got few bullish grabbers. This first grabber has been formed on Thursday last week. This is Friday grabber, and market keeps them valid, suggesting that at least this stop should be taken out would let us to think that maybe market will hit the COP. This means one thing, important thing for daily setup is that until the lows of these patterns are valid, it's a bit tricky to consider taking the short position, at least on a daily chart. So this is not a very pleasant moment for bears who would like to take the short position. If, of course, you are just holding the bearish position right from this area, that's a more simple thing. But for a new entry here, this is a tricky moment that makes trader uncomfortable for taking the new short position. So on the follow time frame chart at the same time. So here we have potentially bearish setup, but the question is still unclear whether the market is already turned down or we should get some upward swing before final downside action starts. On the follow time frame chart, we have another moment that is, well, mostly could be treated as a bullish. Here's, you can see market starts to form some consolidation. It's forming here. But market just can't complete the OP target. So it stands really in a tight range, can't break it down. Standing at the 1793 support. It means that some support and buying entry, purchasing stands right below this area. So as market dropped here, it's at the same time as buying out. All offers just taken out and market returns and pick up. From the technical point of view, this price action for the hand and shoulders is not very good sign. So yes, the shoulder might be choppy, but when the bears control the situation, it should be some more direct downside breakout. But when the market starts to form the coiling price action above the neckline, well, this makes the pattern weaker, and it could suggest that maybe some later this moment market could turn up again. You probably saw many times when, for instance, hand and shoulders is forming, market can't reach the neckline, starting upward action. And in 90% cases, this leads to the failure of the hand, shoulders, and upward reversal. So here's might be the same thing, but at least this price performance, as market stands almost actually second week in a row with this flat action above the neckline, forming a reaction and resistance, can't be treated as the bearish. So this is a more bullish sign. But at the same time, we can't say that any of the setups has failed already, because market stands in a narrowing consolidation and keeps door open for both directions. And recently we discussed already that depending on your view on the market, you could consider position taking or wait for more clarity. For instance, maybe after the Fed statement we will get some more direct action that will clarify the situation and let us better understand where market is going. At the same time, if you still would like to take the position, you could do this inside of this area, but depending on the direction that you would like to follow. So based on the grabbers, you could try and take a position at some support area, probably with the stops below this area, below these lows. Taking for the short position, as we already said, it's not necessary to hide stop right above the C point, but it's enough if you will place it somewhere above this area. Currently, the setup that we have on the hourly chart provides some opportunity for bears. Because take a look, market inside of this consolidation, let's call it as a diamond maybe. So as you can see, it has formed nicely looking Gardner's triple to sell pattern. And if you are searching to go short, you could use this pattern with the stops above this area. As I said, this will be very small potential loss. And in the case of the downward direction, and if market will indeed fall to the downside, that will be a really perfect entry. At the same time, if it will be some jump above it, loss will be very small. So this is the setup that today's bears could get and could consider. For the bulls, well, if market will return right back down close to this position, it will be very close to the bottom of this area and invalidation point of the grabbers. So if you would like to buy gold, you could consider probably taking the long position here. But that's only for active traders and who are ready to accept risk of some uncertainty here. And coming Fed statement that definitely brings some volatility and spikes and so on. For others who prefer to follow the conservative approach, it would be better to wait and do nothing and see for clarity. Because whatever direction market will follow, later on some retracement, it will be a chance to take the position. So that's our pre-Fed view on the gold market. Let's see what will happen during the press conference and what performance market will show today in the evening.